Bismillahirrahmanirrahim. Assalamu alaikum. I am Syed Akif Shah, lecturer finance at Institute of Business Studies, Kohart University of Science and Technology. The title of this course is Intermediate Accounting. The course code for this subject is BS 363. This is lecture number 19, and the topic for today's discussion is types of problems in departmental accounts under case B. The outline of this lecture consists of the discussion related with the types of problems in departmental accounts, and the emphasis of this lecture is specifically on point B, where we shall discuss the problems relating to the calculation of departmental costs. The case A has already been covered in my previous lecture. Therefore, the emphasis of this lecture will be on the discussion of point B. Let us take the case 2, calculation of departmental cost, illustration 13.4 as an example from the recommended book. The following purchases were made by the business house having 3 departments. So the primary data is that the company has basically 3 departments: Department A, Department B, and Department C. Department A has made 1000 units of purchases. Department B has purchased 2000 units, and the Department C has purchased 2400 units. In sum, 5400 units have been purchased by this business house at the cost of 1 lakh rupees, or we must say 100,000 rupees. This is the initial data regarding the purchases. Secondly, the stock on 1st January's data has been given. This represents the opening stock of the company, and specifically it is related with 3 departments. Therefore, the opening stock for Department A is 120 units, for Department B it is 80 units, and for the Department C, opening stock on 1st January were 152 units. Dear students, remember that these stocks are always recorded at cost, that is the original price at which they have been purchased by the company. The sales data has been given. For Department A, 1020 unit has been sold at the rate of 20 rupees each. Similarly, for Department B, 1920 units have been sold at the rate of 22.5 rupees each, and for Department C, 2496 units have been sold at the rate of 25 rupees each. The last data pertaining to this question is that the rate of gross profit is the same in each case, and the question asks us to prepare departmental trading accounts. So specifically in this data, we shall discuss the calculation of departmental costs in detail, like how to calculate the cost pertaining to purchases, as we have given the accumulated cost of 100,000 rupees. So how would we know that what is the cost of Department A for each unit, for Department B what is the unit cost, and for Department C what is the unit cost, so that we can come up with the purchases cost of Department A, B, and C. Similarly, we also require the original cost per unit for opening stocks, so that we can make the departmental trading accounts. Here we have given the cost for each department, which is 16, 18, and 20, which shall be discussed shortly over here. But before discussing how we come up with the different calculation in the departmental trading account, let's take this solution as a snapshot to understand how to make departmental trading accounts for Department A, B, and C at the left hand side, and then at Department A, B, and C at the right hand side. The right hand side consists of 4 columns. The first is elaborating the titles. The remaining three are actually having the department A, B, and C numerical values. Similarly, at the left hand side, once again we have the account titles, and then department A, B, and C has been elaborated in the next three columns. The general method to make departmental trading account is to write down the opening stock purchases at the left hand side and sales and closing stocks at the right hand side, and then we need to sum all the columns so that we must know that which column is less than the other one, so that to calculate the gross profit of each department. Let's discuss how these values and numerical cost have been calculated. So the first step is to find out the gross profit percentage. The working consists of, in order to determine the rate of gross profit, it is assumed that all units purchased have been sold away. So the sales of department A is 1000 units. Whatever they have purchased have been sold away. This is the assumption of this question or working notes. And we knew that the sales price of each unit in department A was 20 rupees. So multiply 1000 with 20 and resultantly we get 20,000. For department B, we have purchased 2000 units. The sales price of each unit was 22.5. Therefore, the total amount of sale was or could be 45,000 rupees. Similarly, for department C, 24,000 unit multiplied by 25 will give you 60,000, and the total sale volume of this business house is 125,000 rupees. We have also given the cost of total purchases in the question. Let's go back. This is the cost of total purchases which is given in the question. It is 1 lakh. So 100,000 needs to be subtracted from the sales, since we know that in order to calculate the gross profit we have to minus the cost of purchases or cost of goods sold from the total sale volume of the company. So we did the same. 125,000 total sale minus cost of goods sold, which is 100,000 rupees, and it has given us 25,000 of gross profit. Now let's calculate the percentage of the gross profit, which is also known as gross profit margin. The formula to calculate the gross profit margin or percentage is to divide the gross profit, which is 25,000, by the total sale volume, which is 125,000 rupees. So we did the same, multiply by 100, and it has given us 20% gross profit. So we come up at the conclusion that the company has 20% of gross profit percentage. This is the way formula we can use to find out the per unit cost later on. Let's go towards the second working. The major formula to calculate gross profit is sales minus cost of goods sold. Let's assume that we have 100 rupees of sale. Gross profit is unknown, so we can rearrange it over here and is equal to cost of goods sold. Let's take the previous example of the gross profit. Let's suppose it is 20%, then we can write down that 20% of sale is 20 rupees. After subtracting it from the sales, we come up with the cost of goods sold of 80 rupees. So same has been done in the above narrations. As the gross profit rate is the same in each case, we can find out the cost price. So for department A, there is 20% of gross profit. So the 20% needs to be applied on the sale price of the department A, which is 20. After multiplying it with 20% with 20 rupees, we come up that the gross profit of this department is rupees 4. So minus it, sales price minus gross profit gives you per unit cost, which is 16 rupees in department A. Similarly done for department B and for department C. Once again, for the C calculation, let's take an example that 20% has been applied on 25 rupees. and the resultant gross profit of Department C is 5. After minusing or subtracting it from the selling price of Department C, we come up with 20 rupees per unit cost of Department C. Now, as we know that since we got the cost price or cost per unit of each department, now we are in a position to find out the relevant cost factor associated with the trading account of Department A, B, and C. So here we have the trading account for Department A, B, and C. Let's discuss how did we calculate the opening stock value of Department A, B, and C. So we can see that in order to calculate the opening stock, we must know that what was the opening number of units available in the department. In Department A, we knew that we had 120 units. Department B, we had 80 units, and for Department C, we had 152 units at January 1st of the year. So what we can do, we can just simply bring these values of per unit cost and multiply it with the relevant departmental number of units so that we can get the opening stock value for Department A. We have multiplied 120 units with the per unit cost pertaining to Department A, and we have come up with 1920. Similarly done for Department B, and the same way we have calculated for Department C, that is to multiply 152 units by 20, which is the per unit cost as we have calculated above. So the final value for Department C's opening stock is 3040. We have actually calculated and picked these value and simply plug it into the trading account of business house question. Let's see. So here we can see that we have plugged the relevant value for Department A, Department B, and Department C. Now let's discuss the next calculation. Cost of purchases. How did we calculate cost of purchases? As we knew that we have purchased 1000 unit in Department A, 2000 unit in Department B, and similarly 2400 units for Department C. Once again, we have taken the same per unit cost as we have calculated with the help of this formula, which is sales minus cost of goods sold is equal to gross profit. So therefore, after simply multiplying the unit cost with the number of units purchased, we can get the resultant purchased amount or purchased value. For Department A it's 16,000, for Department B it's 36,000, and for Department C it is 48,000 by multiplying the number of units purchased with the unit cost of the product. Let's counter check that either we have plugged this data correctly or not. 16, 36 and 48,000. So here we can see that in the purchases section we can see that Department A cost of purchase is 16,000, for Department B it's 36,000, and for Department C it is 48,000. Now let's go back with our working to find out how did we calculate the sales volume for Department A, B, and C. As we know that the sales price of the per unit in each department has clearly been mentioned as 20, 22.5 and 25. So we can multiply it with the number of units sold by the department. Like for example, Department A has sold 1020 units. So we can multiply it with 20 rupees of per unit, and we can come up with the total number of sales volume for Department A. And similarly, we can find out the sales volume for Department B by multiplying it with the per unit cost, per unit sales price. And in the same fashion for Department C, we can calculate it by multiplying it with the sales price pertaining to Department C by number of units sold, and we can come up with the total sale volume for Department A, B, and C. So by simply multiplying, we arrived at 20,000 units sales volume in rupees for Department A, 43,200 sales for Department B, and 62,400 of sales for Department C. The final value needs to be calculated is for the closing stock. So let's go and check out the working. In order to calculate the closing stock, we knew the formula to come up with the closing unit is, in order to find out the number of units in the closing stock, we need to write down the opening stock plus purchases minus the units sold. For example, if we had 120 units in opening stock of Department A, we have purchased 1000 units in addition to 120 will come up to 1120 units, and then we have sold 1020 units. So resultantly, we were left over with 100 units in our inventory. Similarly, we can discuss about Department C. We had 152 units at the opening of the year. Then the company has purchased 2,400 in addition to 152. So therefore, we have added both of these. And then finally, the company sold 2,496 units. So the resultant ending inventory in this stock was 56 units. So this is the way how we can calculate the ending inventory in our stock. And once again, the unit cost per unit cost has already been calculated with the help of gross profit margin. For each department, it is 16 for Department A, it is 18 per unit for Department B, and it is 20 for Department C. So this is the way we have calculated the ending inventories or closing stock denomination in terms of rupees. By simply multiplying the remaining units with the per unit cost, we come up with 1600 rupees of closing stock for Department A. Similarly, multiply the ending inventory with per unit cost at Department B, which is 18. We come up with 2,880 rupees ending inventory or closing stock for Department B. And in the same fashion we did for Department C, number of units in the ending inventory multiply by 20 rupees per unit cost has given us 1,120 rupees of closing stock. Now let's check out if we have plugged this value correctly in the trading account of this company. 1600, 2880 and 1120. 1600 for Department A closing stock, 2880 for Department B, and 1120 for Department C has plugged correctly in the right place. Now after calculating the numerical values or denomination in terms of rupees for each department, we are in a position to find out either we have earned gross profit or still the departmental trading account is showing us loss. The method is to sum up the first column and we come up with 22,000 rupees. At the left hand side, we need to sum up the first two values, which is opening stock and purchases. And this value is quite less than the right hand side column value. So the difference between two is actually our gross profit, which is 4,080 rupees for Department A. Let's check out for Department B. In the Department B, once again, we have sum up the column and it come up with 46,080. However, the Department B's cost of production was quite lesser than the sale volume. So therefore, After subtracting the opening and purchasing cost of inventory from our sales volume, we come up with 8,640 rupees of gross profit for Department B. Now let's check out for Department C. You need to sum up both the values, and it is 63,520. However, the left hand side's first two values for Department C are quite lesser than the right hand side value. Therefore, the difference between these two is considered as our gross profit on the basis of the same formula which we have previously discussed as well. That is, sales minus cost of goods sold will give you the gross profit. So the same formula has been used over here as well. 63,520 minus 3,040 minus 48,000 has given you, or you are come up with 12,480 rupees of gross profit for Department C. So this was all about how to calculate the departmental trading account and how to allocate cost associated with each department. Both sides are now equal, and for each department we have realized that Department A has 4,080 gross profit, Department B has almost double the profit to Department A, and similarly it has 3 times. Department C's gross profit is 3 times to the Department A. However, it is 1.5 times of the department, almost approximately I can say that 1.5 times of Department B. So we can conclude that the Department C's gross profit is quite larger than the rest of the department, and it is going quite well in respect of its inventory management and the gross profit as far as the gross profit is concerned. However, we cannot finalize our conclusion on the basis of departmental trading account only, that this a particular account is doing well and the other one is doing or performing poorly. So this was all about regarding how to make departmental trading account and to allocate the cost associated to the different section of departmental trading account. So thank you very much for listening to this lecture. If you have any confusion or question, free to ask your question on KCMS, or in other way around you can email me on my official email address. Good luck for the day. Allah Hafiz.